All right, time now to check in with our business editor, Ticky Fullerton. Ticky, very good afternoon to you. The market, surprisingly strong today.
Well, yes, surprisingly, given those IMF growth figures for Australia, which came out, well, really, we all read it in the papers this morning, 1.7%, which is below the RBA's forecast for 2.4 in December, I think. But we also had quite strong news from the US in terms of their reporting season, their third quarter, and particularly on their bank side, JP Morgan and Citi came in with very strong numbers on the trading side. Maybe that floated through. Interestingly, the Commonwealth Bank today, which had their AGM, they were up 4% to $80.37. Catherine Livingstone, the chair, careful as she always is, she was talking again very much about all the things that they've been doing to make a simpler, better bank, and that she was open to the ACCC review of whether the banks why they're not passing on the RBA rate cut in full. She thought it would be a very valuable exercise. And Matt Comyn, the CEO, again was talking about how the tax cuts actually he thought were working, which I thought was pretty interesting. We've also had Origin. They had their AGM, and notwithstanding the fact that they had quite a lot of pressure on the climate front to pressure their Eraring coal mine should be closed earlier, they managed to fend off those sorts of calls, and their share price popped up about 0.87%. The big drop was Afterpay, who went down 7.22% when UBS actually decided to halve their expectation of the share price.
Yeah, you mentioned Matt Comyn's remarks there at the CBA annual general meeting. He does seem to be a little more optimistic, I think, than perhaps the IMF right now about the Australian economy. Look, let me get you, what's happening with this Latitude IPO? You told us yesterday about this huge IPO for Latitude. Now it's not happening, it's been pulled. What's going on there?
Absolutely. Remember I spoke to you yesterday about the fact that here we had this enormous float, which was having maybe a little bit of difficulty on the retail side. We were talking about this time yesterday. Well, within about an hour and a half of me speaking to you, the whole thing was then pulled. Now, this is because the private equity owners, including Deutsche and KKR, just decided they could not get enough money for the shares. And while the demand was there at the lower prices, they didn't like the look of the aftermarket once a float starts trading. Of course, it was an extremely big float. But as my colleague at the Australian, John Jury, says at the beginning of his article, celebrity chief executives, think Ahmed Fahour, set to pocket $22.5 million on listing don't sell companies if the facts don't support the deal. And I think that was the question as to whether there was much growth in this company. So this is the second time it's been pulled, David. So what's going to happen now is that Ahmed Fahour, who presumably would have liked to have gotten this float away, he has quite a lot of skin in the game himself. He's now going to have to sit behind on the private side, demonstrate he can grow the business some more, and perhaps there'll be a trade sale down the track.